Right now, everyone is asking the same question. Is Bitcoin about to break out? Or is another correction coming first? Price alone won't give you the answer, but on-chain data already is. If you know where to look, Bitcoin's next major move is not a mystery. Most Bitcoin investors react instead of analyze. When price goes up, they feel confident. When price goes down, they panic. Every cycle, the same pattern repeats. Retail waits for confirmation. They buy strength. They sell weakness. Later, they look back and realize the data was clear. I just didn't know how to read it. Institutions don't wait for price to explain itself. They use on-chain behavior to position early. In this video, I'll explain Bitcoin's next major move using on-chain data, the same way institutions analyze it. We'll break down exchange flows, long-term holder behavior, supply dynamics, and sell-side pressure. This is not about predictions. It's about understanding probability before price reacts. If you want data-driven crypto insights instead of emotional speculation, make sure you're subscribed. This channel is built for investors who want clarity, not noise. Price is a lagging indicator. Price tells you what already happened. On-chain data tells you what participants are doing right now. Institutions trust behavior more than headlines. That's why they're rarely surprised by major moves. If you want to understand where Bitcoin is going, you first need to understand who is buying, who is selling, and who is holding. The market moves after positioning, not before it. 1. Exchange flows tell the first story. One of the most important on-chain indicators is exchange inflows and outflows. When Bitcoin flows into exchanges, it usually signals intent to sell. When Bitcoin flows out of exchanges, it signals intent to hold. Right now, the data shows sustained outflows, even while price remains relatively stable. That's not distribution behavior. That's accumulation behavior. What this means for price. Reduced exchange supply means reduced sell pressure. Price doesn't explode immediately, but downside becomes limited. Institutions care about this asymmetry. Pattern interrupt. Selling happens on exchanges. Confidence leaves exchanges. 2. Long-term holders not selling. Long-term holders represent conviction capital. On-chain data shows that long-term holders are not distributing aggressively. In fact, supply held by long-term holders continues to trend upward. If whales expected a major crash, this behavior would look very different. Instead, we see patience. Why this matters. Long-term holders sell during euphoria, not during uncertainty. Their behavior suggests this is not a late cycle environment. 3. Sell-side pressure is weakening. One of the clearest institutional signals is declining sell-side pressure. Metrics measuring how much Bitcoin is being sold at a loss versus a profit show normalization, not panic. This tells us sellers are becoming exhausted. Markets don't bottom on optimism. They bottom when sellers run out. Markets don't need buyers to rise. They need sellers to disappear. 4. Ucho AGE bands are stabilizing. Ucho H bands show how long Bitcoin stays unmoved. When older coins remain dormant, it means holders are confident enough to wait. Right now, older age bands are stable, not collapsing. This behavior historically appears before larger directional moves. 5. Realized profits remain controlled. If institutions were exiting positions, you would see spikes in realized profits, but realized profits remain muted. This tells us large holders are not using current prices as exit liquidity. That's a key distinction. Distribution is loud. Accumulation is quiet. 6. Exchange reserves continue to decline over longer time frames. Bitcoin reserves on exchanges continue to trend lower. This is structural, not short-term. Less liquid supply means future demand has more impact. Institutions watch this closely. 7. Funding rates show balance. Not greed. Funding rates reflect leverage and positioning. Extreme positive funding signals greed. Extreme negative funding signals panic. Right now, Funding rates are relatively neutral. This suggests the market is not overcrowded, a healthy condition for a sustained move. When leverage disappears, real capital takes control. 8. Stablecoin positioning is increasing. Another subtle but important signal is stablecoin behavior. Rising stablecoin balances often indicate capital preparing to deploy. This doesn't guarantee upside, but it creates potential energy. Institutions don't rush. They prepare. What on-chain data says about direction? On-chain data does not scream euphoria. It does not signal panic. It suggests compression. Compression phases historically resolve with strong directional moves. The data favors continuation, not collapse. Big moves start when nothing feels urgent. WHY retail gets this wrong. Retail focuses on candles. Institutions focus on behavior. Retail wants certainty. Institutions manage probability. This is why retail is surprised by breakouts and institutions are not. Bitcoin's next move. What THE data implies, on-chain data suggests. Downside pressure is limited. Supply is tightening. Long-term conviction remains strong. This doesn't guarantee immediate upside, but it increases the probability of expansion. Institutions position for probability, not certainty. On-chain data is not a crystal ball. Macro events matter. Liquidity conditions change. Institutions don't bet everything on one outcome. They scale, hedge, and manage risk. Retail fails by going all in emotionally. HOWYOUCA and apply this approach. You don't need to track every metric. Focus on trends. Is supply leaving exchanges? Are long-term holders holding? Is sell pressure decreasing? If yes, the market is strengthening under the surface. Bitcoin's next major move won't be announced by price. It will be revealed by behavior. On-chain data shows what participants are doing, not what they're saying. If you learn to read these signals, you stop reacting late and start positioning early. If this breakdown helped you understand Bitcoin more clearly, subscribe for more data-driven crypto insights, and I'll see you in the next one.